One of the hottest topics in personal finance is debating whether you should pay off debt or invest. And I gotta be honest, there isn't always a correct answer. Half of what we're looking at is expected investment returns, which we don't know, maybe how long that you're gonna work for, how quickly you need the money, that might change, and just what's gonna happen in the foreseeable future. So there's a way to look at this decision in just mathematical ways, but then there's also another way to look at it in a behavioral way and how you feel about money. For some people, it might mathematically make sense to invest, but for them it might make sense to pay off debt because they just cannot sleep at night knowing that they have debt. And that's where the personal and the finance get intermixed and the decision gets hard. But I'm going to walk you through how I evaluate these decisions. Let's say that you're somebody that has $100,000 of student loans at an interest rate of 3%. So you have the option to either pay down that debt at a 3% interest rate, or you could go invest this money in the market. And so what a lot of times people look at is, well, what is the average in the market? So if you create a portfolio and the average is 8%, a lot of people will say, well, hey, I might as well invest because 8% is way higher than 3%. But it's not always that simple because 8% is the average. That doesn't mean 8% is what you're going to get this year, next year, the following year, or anything else. But with debt, when you pay off that 3%, you have a guaranteed rate of return of 3% because that's what you're paying down. So a lot of times when you have a low interest rate, 1, 2, 3%, it does make sense to invest because that is significantly lower than what people expect to get in the market, even though that is not a guarantee. But when that interest rate gets higher, like 5, 6, 7, 8% and above, it becomes a little bit easier of a decision to pay off debt because you have let's say it's 8%, you have a guaranteed 8% return by paying off that debt, or you have a hypothetical potential of getting 8% in the market. The reason why it's also still not that easy is because you're not also looking at compound interest and what the value of getting investments in early is. So if you invest at 20 versus 30 because you chose to balance paying off student loans and investing versus wait till 30, you have 10 more years under your belt for compound interest, which helps you build up a larger balance for the future. So I think when you want to try to evaluate how to pay off debt versus how to invest, a lot of times it makes sense to find the balance. But I think a good rule of thumb is if it's low interest debt, 4% or lower, a lot of times it makes sense to invest. But then if it's higher interest debt, 8% and above, all the way up to 30%, paying off that debt might make more sense. And then come up with a rule of thumb for yourself. If it's somewhere between 4 to 6%, look at, are you risk averse? How do you feel about the market? If you're a high risk person, it might make sense to invest as you get up to 4, 5, 6, 7%. But if you're somebody who's risk averse, it might make sense to pay off debt above 4%. I think it's really important to understand who you are, how you feel about debt, and come up with a strategy that works for you. But again, there really is no correct answer because a lot of this relies on the idea of what is going to be future investment returns, which is an unknown part. The other side of this that I would say that you really want to consider is that you actually have to invest that difference. If you're supposed to pay a $400 minimum payment on debt and you say, well, hey, I could pay $1,000, but you know what I'm going to do is I'm going to take that $600 difference and invest it. The key here is you actually do have to invest it. If you're not going to invest those dollars, you might as well put them over to pay off debt than just add to your lifestyle and spend the money. So when you have that argument of invest versus pay off debt, just know that you have to invest to make that difference worthwhile, or you should just be attacking that debt. So hope this helps you understand and at least think through how to pay off debt versus invest for you.